If you have a home loan or thinking about a home loan, you need to watch this video and learn how to avoid one of the biggest bank cons around. To explain the con, let me use the example of Maria and Kevin. Maria and Kevin borrowed $300,000 at 5% interest from Bank A, repayable over 25 years. Their monthly repayments were a bit over $1,700, and they made all their loan repayments on time. After 5 years, when their loan balance was a bit under $266,000, they're looking at the TV and see that Bank B is offering a 0.5% lower interest rate than Bank A. Bank B is offering 4.5%. So Maria and Kevin think that's a great idea and decide to refinance their loan. They go to Bank B and sign up for a new 25-year loan at 4.5% on the balance outstanding on their original loan. They think they've done a great deal as their repayments now are only a bit under $1,500 and they're saving on 0.5% on interest. But what they don't understand is they've just been conned by the bank, and this refinance will cost them thousands and thousands of dollars, even though they're on a lower interest rate. How, you ask? Let me show you. As you can see from this table, had Maria and Kevin stayed with Bank A for the full 25 years, they would have paid Bank A a bit over $226,000 in interest. By changing to Bank B to a new 25-year term, even though they're at the lower interest rate, Kevin and Maria actually ended up paying just over $248,000 in interest. $70,000 to Bank A and $177,000 to Bank B. So this decision, instead of saving Maria and Kevin money, actually cost them $22,000 when compared with staying with Bank A. So what should they have done? Maria and Kevin should have ignored the bank and its 25-year term, and instead selected the remaining balance of their original loan. In this case, it would have been 20 years. If they'd done that, this is what would have happened. Maria and Kevin would have only paid a bit under $209,000 in interest, $70,000 to Bank A and $137,000 to Bank B. This would have saved them over $17,000 when compared with staying with Bank A for 25 years. But what's worse, that decision to take the 25-year loan term with Bank B instead of a 20-year loan term with Bank B actually cost Maria and Kevin just under $40,000. That's right, under the 25-year term, they paid Bank B $177,000 in interest. Under the 20-year loan term, they would only paid them $137,000 in interest. So the extra interest they paid to Bank B for going for a 25-year loan term rather than the 20-year loan term was nearly $40,000. As a bank is in the business of making money, and in this case nearly $40,000 extra in profit, it's not in Bank B's interest to show Maria and Kevin what really happens. That's why the banks don't tell you. The banks know this, but they con you around things like lower interest rates and lower repayments. And this is why effectively extending or pushing out your loan term is one of the biggest bank cons around. And if you keep doing this over and over, it will keep costing you money and you will have to work till you drop because you'll still have a mortgage. Maria and Kevin thought they were doing the right thing, but they were conned by the bank. It's time for you to stop being conned by the bank. Next time you refinance, don't extend the overall loan term. Ignore the 25 or 30-year loan term offered by the bank and stick with the original loan term. I can just about guarantee this will save you many thousands of dollars, which are better in your pocket than in the bank's.